The Huobi exchange is getting split up, and a new FTX insider has come forward against Sam. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Cameron Winklvoss, co-founder of Gemini, has just posted an updated letter to the board of the digital currency group. Cameron previously called out Barry Silbert, CEO of DCG, in an open letter on Twitter a week ago, asking for them to come to an agreement on how to make Gemini earn customers whole, since DCG's company's Genesis reportedly owes them $900 million. He starts out by saying that Gemini and more than 340,000 of its customers have been defrauded by Genesis Global Capital with its parent company, Digital Currency Group. These parties conspired to make false statements and misrepresentations to Gemini Earn users and the public about the solvency of Genesis. Cameron says there's no path forward as long as Barry Silbert remains CEO of DCG. He's unfit and unwilling to find a resolution with creditors. As a result, Gemini requests that the board remove Barry as CEO immediately and install a new CEO who will right the wrongs that occurred under Barry's watch. Winklvoss ends the letter by saying that I'm confident with the new management at DCG, we can all work together to achieve a positive solution that will provide a win-win outcome for all. The FTX event has had some interesting updates surfacing each day. The US Department of Justice was eyeing to seize the Robinhood shares of Sam Bankman-Fried. According to court documents, Sam Bankman-Fried had used a loan obtained from Alameda Research to purchase the shares. Yesterday, we covered that Sam Bankman-Fried was seeking access to his $455 million worth of Robinhood shares. Sam had wanted access to his shares to cover his legal fees, and according to the latest reports, the Department of Justice has officially seized the Robinhood shares from Sam Bankman-Fried. The stock had been held at a UK-based brokerage, ED and F-Man. The court document details also revealed that the seized assets constitute property that is involved in the violation of crimes, including wire fraud and money laundering. It's been made clear that the earlier request by Sam Bankman-Fried seeking access to his Robinhood shares won't be granted. FTX former engineering chief Nishad Singh followed former FTX and Alameda Research executives Gary Wang and Caroline Ellison by reportedly meeting with federal prosecutors to cut a deal. Singh attended a session during the week of January 2nd at the Office of the United States Attorney for the Southern District of New York. Individuals may be granted limited immunity to share their knowledge with prosecutors at such meetings. Prosecutors likely sought to determine if Singh has valuable information to offer the lawsuit against FTX founder Sam Bankman-Fried. Bankman-Fried also faces campaign finance violations, and prosecutors are interested in Singh's knowledge about FTX's political donations. Singh had made significant political donations over the years and could help prosecutors gain a better understanding of FTX's political activities. Singh personally has donated more than $9.3 million to Democratic Party aligned initiatives since 2020. In 2021, the Political Action Committee Mind the Gap, founded by Bankman-Fried's mother, received a $1 million donation from Singh. Singh could join Wang and Ellison as the latest FTX-linked executives to reach an agreement with federal prosecutors. After Wang and Ellison entered pleas, U.S. Attorney Damian Williams issued a warning in December 2022 to those who participated in misconduct at FTX and Alameda, saying, "Come see us before we come see you." Bankrupt crypto brokerage Voyager Digital filed documents in a United States court on January 8th in response to objections raised to the Binance US proposal to buy out its debt. Voyager announced that it had approved the offer on December 19th. The Securities and Exchange Commission, 4 states, the US trustee, and Alameda Research filed objections to it. Voyager agreed to sell its remaining assets to Binance US in December in a move it said will clear a path forward for Voyager customer funds to be unlocked as soon as possible. Binance's offer, which was said to be the highest and best bid, was worth roughly $1.02 billion in total. Voyager stated in one document that objections to Binance US's offer failed to put forward any factual or legal support, while Binance US offered creditors higher recovery rates than other proposals and expedited recovery. Alameda claims the plan did not respect its loan facility claims, which Voyager said it only entered into the loan agreement based on Alameda and FTX's fraudulent and false representations. Voyager entered into a $500 million loan agreement with Alameda to help it cover its losses it experienced after the failure of Three Arrows Capital. Voyager said the Binance offer was the best bet to make customers whole again, and also pointed out that the agreement preserved its fiduciary out should a higher or better alternative transaction be proposed. Binance, the leading cryptocurrency exchange in terms of daily trading volume, has joined the Association of Certified Sanctions Specialists, ACSS, which works to improve the qualification of sanctions compliance professionals employed by global companies. In an announcement, Binance said, "We'll be leveraging the training materials, comprehensive databases, and deep networks with ACSS to further enhance the skills and expertise of our team." Binance said the blockchain industry is still in its early years, and it's our priority to continue upholding the highest level of compliance amid a fast-evolving space. Binance's proximity to its collapsed competitor FTX has given federal prosecutors a reason to seek new information in their 4-year-old investigation into the world's largest crypto exchange. Over the past few months, U.S. attorneys in Seattle have been asking financial firms to hand over their records of communication with Binance. Binance responded by saying regulators are doing a sweeping review of the entire crypto industry against many of the same issues. This nascent industry has grown quickly, and Binance has shown its commitment to security and compliance through large investments in our team, as well as the tools and technology we use to detect and deter illicit activity. A recent Forbes analysis reveals over $12 billion in asset outflows from Binance in the last 2 months, led by Paxos-issued stablecoin BUSD and Binance's own BNB coin. The ability of crypto exchanges to honor mass withdrawals became a key selling point after the collapse of FTX. FTX didn't have enough liquid assets to honor withdrawals in early November 2022, which led to its demise on November 11th. Private wealth management Bernstein said Binance is solvent, liquid, and stable, which is evident in the exchange's more than $55 billion in verifiable cold wallet addresses. The crypto exchange can also pass the test of withdrawals, as it did when $6 billion of customer funds were withdrawn on December 13th. They added that Binance's undisputed market leadership has not been an accident. It has a long history of doing right by the customer, and the exchange has made customers whole through hacks and regulatory challenges. Binance now accounts for about 75% of the global crypto trading market. As stablecoin USDT continues to trade below its peg, Justin Sun's Huobi Global is suffering the consequences. The crypto exchange has lost 18% of its market share volume since 2020 and faces an uphill challenge to claw it back. By the end of 2022, Huobi represented 4% of the overall exchange market, down from 22% in 2020. Stablecoin USDT is issued by the Tron DAO Reserve, which stabilizes exchange rates for stablecoins issued on the Tron blockchain, founded by Justin Sun. Sun's latest issues began when USDT failed to regain its peg after the FTX collapse. It has remained below $1 since. Huobi customers pulled over $100 million from the platform last week as solvency concerns grew. Sun, who is Huobi's majority shareholder, in turn then moved $100 million of USDC and USDT from Binance to Huobi. There's been much speculation and rumors surrounding the crypto exchange Huobi Global, which rebranded to simply Huobi at the end of November 2022. Reports indicate that Huobi laid off 20% of its staff and plans to maintain a very lean team going forward. Amid the speculation, South Korean news outlets News One had reported that Huobi Korea wants to break away from its parent company, Huobi. Huobi Korea plans to purchase shares from the parent company and change its name. The name change and stake purchase will sever the ties between the two firms, allowing the Korean exchange to operate independently. A Huobi Korea representative said that Huobi Korea has suffered from being perceived as a foreign exchange. The change can be interpreted as an effort to demonstrate that it's a domestic exchange and that it's safe. To kick off the new year, our partners at Kyberswap are excited to announce a new Kyberswap trading campaign with partners ZK Bob and Umami Finance. They're giving up to $10,000 in KNC in prizes lasting until February 6. This will be the start of a long line of trading contests conducted in collaboration with Kyberswap's partners, strengthening their respective ecosystems while bringing you opportunities to earn KNC rewards. Traders can now trade Bob and Umami on Kyberswap to climb up the ranks and be winners of Kyberswap's trading grant campaign. Traders can participate by swapping the Bob token on any one of 4 chains, including BNB, Polygon, Optimism, and Ethereum. For the Umami token, traders can participate by swapping Umami on Arbitrum. The winners will be able to claim the prizes on the Kyberswap trading leaderboard in February, and I'll post a link down below with all the details and information you need to participate. According to a recent post on Reddit r/cryptocurrency, Canadians have just received an email that Crypto.com will be delisting USDT pairs on their platform. The post goes on to say that they will be delisting USDT from their app, exchange app, earn program, and other services. It seems there's no clear explanation as to why right now, but other users commented saying what's so sketchy about USDT, as others responded by saying it's easier to ask what's not, and that USDT has 0 true audits. As more information comes out on this, we'll keep you guys posted. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.